research study that we're talking about was from a couple gentlemen from Morningstar that talked about being able to measure the results of making intelligent financial planning decisions, and they have called that gamma, and so gamma designates the quantifiable positive you might get to your investment results. Now, one of the key elements of those intelligent financial planning decisions that you'll make is taxation. And taxation has two heads to it, I guess you'd say. One is, how do I organize my portfolio so that it's producing as little ongoing tax as possible? So that I'm not just, as I'm sitting there watching my portfolio grow, and I'm not paying the tax on that more than I should, and it may change the type of investments I buy. It may change certainly where I hold those things. What do I put in my tax-free savings account? What do I hold in my RSP? If I've got a non-registered account, what kind of investments I'll make in the non-registered account to take advantage of the dividend tax credits and the lower taxation on capital gains and the like. So those tax decisions will give me a positive result in that I will pay less taxes and thus enjoy more after-tax return from my portfolio. Now, the second piece of this is that I am going to be taking money out of my portfolio to live my life and enjoy my retirement. And as I'm making those withdrawals, I also want to make good decisions about those withdrawals, on where they come from and the order of use of my assets and so on, to also control the tax bill to what I want. Now, with our clients, we never like talking to them about income, because at the end of the day, in Canada, all sources of income are taxed. There's just about no income that you're ever going to earn that's not taxed, except not paying anything on the gains you make on your house. Other than that, just about everything else is captured. And so an additional goal is always to make sure that your lifetime tax bill is as small as possible. And you're going to achieve that by first organizing your portfolio so that it doesn't produce more taxes than it should just while it's sitting there. And also that I want to pay as little taxes as possible upon the withdrawals, and then also pay as little taxes as I can at the end. So we want to take a full life approach to this tax situation. So again, what we're going to be focused on is, how much cash flow do I need? How do I get that cash flow as paying the least overall taxes for the rest of my life? And we want to organize things to achieve that. And that's what they talk about, is making intelligent financial planning decisions about the asset locations and your withdrawal strategies being tax efficient.